Coming up, we'll talk about the stock market, which continues to look red here, especially the German DAX, taking a big hit here today. Chinese stocks are also taking a bit of a tumble. The US dollar is rebounding off the idea that rate cuts in December might not be coming. The VIX is higher again today, and gold continues to chop around after what has been a pretty incredible year. We'll talk about all of it and more, including top trading setups that I'm looking at going into this week. Make sure to hit the thumbs up button, subscribe, and let's get into it. And just a quick reminder, as always, this is not financial advice. I'm simply sharing my thoughts and opinions for educational purposes only. Let's jump right into, first and foremost, where we are with this gold market rally. Now, I want to show you an interesting chart. And today we had a webinar event where we talked about our top trading setups for 2026. By the way, if you still want to grab access to that and watch the recording, I'll leave a link in the description down below that you can grab. Well, in last year's presentation, I mentioned that the 12-month chart, yes, I know we don't whip this one out very often, but every once in a while, you got to take a look at the 1-year chart. And looking at the 1-year chart, last year during the webinar, we mentioned that typically gold has clusters of really strong performing years. And we made the idea or the prediction that gold would continue to have a very strong year in 2025. That has been very correct, and it was one of my better plays this year to be on the long side of precious metals. And notice this theme if we look back during major bull markets in precious metals, you can see that there's sort of this cluster effect where lots of bullish years happen all at once, and then you go into these prolonged periods of consolidation or sideways trading action. So my educated guess, just based on this simple idea that gold and precious metals in general tend to have these clusters of good years together, would tell me that it's hard to call the top on these things and that gold could continue and that maybe 5,000 an ounce is a reasonable possibility for the price of gold next year. And one of the easiest reasons to stay bullish on precious metals over the longer stretch, in my opinion, is just to look at the US national debt. Now, this is not unique to just the US. The whole globe seems to be piling on debt faster than we can create it, or create, I should say, growth in the economy. But something really interesting here is this just goes up and up and up, and they continue to spend well beyond their means, not just the US, like I said, but other places, the UK, most of, all over the world, we're seeing this issue. I always find this little section right here quite interesting within this page, which is the dollar to gold ratio should actually be at $9,725 per ounce. And if we look at silver, it says the dollar to silver ratio in terms of like the creation of dollars versus the actual silver in the world, says it should be at 1,227 per ounce. And I think over time, gold and silver will continue to rise. The question is it going to be sooner or later? What I mean by that is, are we going to get more of this consolidation pullback in the price, or is it just going to continue to drive higher? And I do also want to warn that even if we do have a really sustained, really strong bull market, it's still very possible that within the next few months, you could see gold and silver prices correct sharply, just because it's a natural part of a bull market. And even, healthy bull markets, you have big up waves and big down waves. You can still have these corrective pullbacks. So while I am not particularly bullish on gold and silver at this time, long term, I kind of always am. Within the Edge Finder, gold is getting a +4 reading and silver is getting a +5 bullish reading. And when we look at silver a little closer on the daily chart, you can see we actually just retested the prior all-time high and have pulled back for the last few days. I think critical support for the bulls is probably around this $49 an ounce mark. So if you do see continued downside in the short term down to this area, I'd be very keen to see how price reacts at that level. Again, long-term momentum still seems to favor the bulls, but I think it would be also perfectly normal to see this thing consolidate or move sideways or pull back in the next few weeks. I'm not really bullish or bearish on gold in the short run or medium term, but long term I remain bullish. And this week we're set to get some pretty big economic data. Specifically, the NFP report is coming on Thursday, and on Friday we will get a commitment of traders report. The jobs data especially will be really interesting because it will open our eyes a little bit further to the reality of the labor market. Are things worsening or are things holding up okay? The NFP report has huge implications for whether or not on that December 10th meeting that's coming up, whether or not the Fed is going to cut interest rates or hold them steady. Obviously, if the jobs market holds up okay and is doing a little bit better than expected, then no rate cut probably, and the dollar may continue to strengthen. However, if the employment data is weakening, it's very possible that the Fed may choose to cut that interest rate on the December 10th meeting. Really, that has been the big thorn in the side of the Fed, is specifically jobs market data weakening. And although we haven't had an NFP report in a while, it's very obvious to see in the NFP jobs data over time that we're trending lower in terms of number of jobs added. We can also see a similar theme in the JOLTS job openings number here in the US. Job openings have been declining for a while. But the reason it's not so easy for the Fed to just cut interest rates right away to help with this problem is because we also have rising inflation at the same time. Inflation's still at 3%, a ways away from the Fed's target of 2%. And this is where you're getting the back and forth on the US dollar. If you were to see a more clear picture arise for whether or not the Fed should cut interest rates, it will likely help us to make a better decision as to whether the dollar index is likely to continue to break higher to new highs, or if we're going to stay in this consolidation zone and maybe head back down towards the lows. Again, a weakening jobs data mark here on this upcoming Thursday could help to give us a little bit more clarity about where the jobs market actually is and what the Fed will likely do next. Again, if the jobs data that comes out is okay, it may deter the Fed from feeling the need to cut interest rates sooner. And remember that rate cuts coming in faster than previously expected is bearish for the dollar. But rate cuts themselves don't necessarily cause the dollar to go down. I know that sounded super confusing, but let me explain. The market is already expecting for the Federal Reserve to cut interest rates. The question is, how fast are they going to do it? Well, if you get worse jobs data, it will surprise the market and say, oh, yeah, they're going to cut rates faster, which would cause the dollar to move lower. If, however, the jobs data looks okay, that could deter the Fed from feeling the need to cut interest rates quickly, which would make the dollar look relatively strong to other currencies that may be cutting their interest rate faster. Remember, currencies are all relative to one another. Who's cutting interest rates the fastest? That currency is weaker. Who's cutting interest rates the slowest? That currency is stronger. And that obviously has huge implications as well on the precious metals world. If you get a Fed that is cutting interest rates faster, that would be more of a positive thing because fiat currency would lose value quicker in a rate cutting cycle, as opposed to if they hold interest rates steady for a little while, gold could continue to range bound. And I think that's really where, if you take a look at gold and wonder, hey, why is this thing kind of slowed up its upward trend? I think a big part of that is because rate cuts have gone from a given to an uncertainty. I also find it interesting that seasonality seems to be playing perfectly on gold this year. I mean, I couldn't find a better example, basically. There's only been one period of time where seasonality has seemingly been wrong on gold, but for the most part, we have followed suit. The 10-year average is this dotted line where we can see we had the upward shoot that gold followed this year, then we went sideways as expected, trended up, kind of diverged here, trended up, and now we seem to be consolidating, and just shows how strong seasonality can be, given that it's been really hard to call any point in time where gold has paused its upward trend this year, and yet seasonality has done an excellent job at doing that here this year. So if seasonality is to be trusted here for the rest of this year, we would expect a little bit of sideways to maybe a little bit upside here into year's end, but not a huge move from here in either direction. You can see that when we look at November and December, we are expecting a slight positive expectancy in gold price, but not too much. Taking a quick look at options flow specifically for gold here today, we are not really seeing an extreme in either direction. But I thought this was kind of interesting. Notice how the bearish sentiment got really strong over here right as the gold market bottomed out. The put call ratio is one of my favorite indicators, and it can be used for gold, silver, stocks, all sorts of different things. But I find this to be a really useful tool for noticing extremes. Here's a look at the Bitcoin to gold ratio. Check this out. We are plummeting to new lows on this indicator here in the last several months, suggesting that risk-off sentiment is still alive and well in this market. What this chart shows you is that Bitcoin is underperforming gold here recently. Gold is holding up quite strong relative to Bitcoin. Even if gold's not necessarily skyrocketing, gold is still doing much better than Bitcoin here recently, is what this is showing you. And stocks continue to be challenged here to make any sort of decisive move. We are still sitting around support that we put put in last Friday and the Friday before. I'm very curious to see if we're actually going to find support here. I think one of the big indicators that we maybe are really back in bull territory would be if we could take out this prior week's high. I think that if you can get back above that solidly, we're likely headed to all-time highs. But currently still testing support, and also this moving average that we've talked about over and over on the videos here recently, the 50-day moving average, which recently has been acting as dynamic levels of support. Let's see if it can hold that area. The put-call ratio did show some really bearish sentiment last Friday. Let's see if that is sort of a potential short-term bottoming signal or not. I'm still a fan of the idea that the end-of-year rally in stocks could be on for now. We still have some decently healthy economic data on the big metrics here that we watch on the channel. Stocks still getting a pretty strong reading based on this. And that's of course showing up when we take a look at our top setups page, where you can see the NASDAQ, Dow Jones, S&P 500 are all getting strong readings within Edgefinder for now. And sometimes we get questions from customers who are considering the Edgefinder asking, how accurate is this product? And while this tool is not necessarily a timing indicator, it doesn't tell you buy here, sell here, I do want to show you something that's kind of cool, as to show you the historical score specifically of Edgefinder on particular assets. So if we're taking a look here at gold, what you can see is the score plotted over time of the Edgefinder's overall findings. What this shows you is at which point in time did the Edgefinder get bullish or bearish. What we can see here is that anything over a +5 score, if we zoom in on this little section here, you can see we have anything over a +5 score is a bullish reading, anything under -5 is a bearish reading. And so when we look at this, what we can see is that right around March, we did start to get some strong readings on Edgefinder for gold specifically. And then we kind of went neutral in May. Then we got bullish readings starting again in June. I especially like to see this thing clustering bullish signals. That to me is even more strong when you see Edgefinder persistently staying bullish as opposed to one singular reading. But still, a little bit of bullishness came in July, and then you can see we had a persistent bullish reading in August, and you can kind of see at the top hand of the screen what happened in gold price during that time. We did get one brief bearish signal here, or actually two bearish signals briefly right around this area, which was sort of a wash. I actually took a trade and took a small profit and then got out of that trade, and then a singular bullish here reading recently, but nothing super crazy right now. And here's a reading for the NASDAQ as well this year between March and current day. You can see it's pretty much had a bullish reading on the NASDAQ for most of this year, which has absolutely been the right call. If you don't have the Edgefinder, now is the best time of the year to pick it up. We're currently doing our Black Friday sale, which makes it 40% off for a limited time. This sale is not lasting much longer, so take advantage of the low prices. It is the lowest discount that we do, or the biggest discount, lowest prices that we do all year long. So if you need any information, check the description down below, and the promo code to use is YTVIP. If you have any questions, or if you need help with setting up a payment plan to make the product more accessible to your current budget, here's some information. Simply scan the QR code on the screen right now, or click the first link in the description down below to speak directly to a member of our support team here at A1 Trading. We want to make sure that our products are accessible to you, and if that means you need to set up a payment plan to make the product easier to afford today, I just don't want you to miss the discount while it is live, as this is, like I said, the lowest price that we do all year. So we can basically make it so that you can split up the cost into 2 payments if necessary. All you have to do for details on that is to send us a message using the first link in the description or scanning the QR code that you see on your screen. So one of my ideas going into 2026 is I do actually think that there is a possibility that the dollar starts to further move higher from here. I don't necessarily have the data right now to make that call, but I do think that on a broader standpoint, the US economy is still head and shoulders above the other ones in terms of its peers, and I think that that over time will show up in the interest rate differential. Taking a look at the US and its interest rate, what you can see here is that we have begun cutting interest rates, but we're still at a decently high interest rate, especially when compared to peers. For example, Europe has cut their interest rate pretty considerably, Canada as well, Australia, and Japan has a very low interest rate at just 0.5%. But this brings me to a really important point when we take a look at the UK. The UK has the same interest rate as the US, but why would I still pick the dollar over the UK? Well, this gets pretty nuanced, but the US has just a 3% inflation, which is not low, but it is better than the UK's. The UK is experiencing 3.8% inflation. What this tells you is that after considering interest rate minus inflation, the real yield between these two currencies actually favors the US dollar, as the purchasing power is deteriorating faster here on the British pound over time than it is on the US dollar based just on the CPI year-over-year readings. What I just explained to you is a new feature and tool that the Edgefinder team here behind the scenes is currently working on. We're going to build some stuff that cross-examines actual data against relative to other currencies and builds a watch list or a reading for that. Currently, the Edgefinder, it is really wonderfully built for kind of short-term and mid-term length traders because again, it helps to compare these two currencies on their economic data. But from a longer term perspective, if you're a longer term carry trade person in the Forex world, stay tuned because we have some really cool products that are coming to Edgefinder, which will help you to analyze long-term actual data points on these two economies, comparing one to the other. We've been adding so many features here recently, like for example, our AI generated news summary, which takes out bias from articles and generates an overview of what it seems the market is feeling or calling for when it comes to market sentiment. And this coming Friday, we will finally get some institutional data from the commitment of traders data. We'll be able to see what institutions have been buying or selling. So stay tuned on that. And if you have a copy of Edgefinder, make sure to check in on this on Friday afternoon. Today's video is sponsored by Black Bull Markets. Black Bull is a New Zealand FMA regulated broker offering Forex, metals, and crypto trading to their users. With access to over 26,000 tradable instruments, everything from gold, commodities, indices, and more, through their CFD platform, you can trade pretty much anything. They're also backed by one of New Zealand's largest investment management firms and provide institutional grade trading conditions. Black Bull Markets has also earned multiple industry awards for their fast execution speeds and their leverage trading opportunities on their platforms. Traders can access up to 1 to 500 leverage and choose from several platforms like MT4, MT5, CTrader, and TradingView. And something super cool is that they offer no commission on crypto trading, as well as highly competitive spreads, especially on Ethereum. And for a limited time, active traders can receive free TradingView Premium and up to $60 reimbursed every month just for trading with Black Bull. And if you're interested in copy trading, they have an expansive platform just for that. You can see real trading results from other traders in a live environment through their copy trading platform. And when it comes to choosing a great brokerage, choosing one with competitive trading costs in the form of spreads and commissions is very, very important. With their ECN Prime option, you can see spreads from 0.1 pips, which is pretty crazy. And of course, if you're a larger trader, this institutional package looks incredibly competitive with spreads from 0 pips as well as a $4 round turn commission. Of course, there is a minimum deposit on this, but all three of these look highly competitive compared to the industry. Make sure to use the link in the description down below. We'll leave all the information you need to start trading with Black Bull and start taking your trading to the next level with their amazing platform, their competitive spreads, as well as their copy trading platform if that's something that you're interested in as well. So like I said, make sure to use the link in the description down below to support my channel and also to check out Black Bull to see if it's a right fit for you. Now back to the video. And like I said earlier in the video, don't miss the chance to pick up a copy of Edgefinder at our lowest price of the year. Like I said, all the information can be found in the description down below. If you want to explore the product, simply head over to our website, a1trading.com.